We got more big news for Tesla stock investors as reports came out for sales figures in Europe during May. I'll talk about the details of those reports, whether sales were up or down, and what it could mean for Tesla stock investors as the company readies for the start of driverless car testing this month in Texas. So let's go over those details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, so Tesla stock was down 2.5% this morning as more bad news came out about sales figures in Europe. So new data from France National Auto Body reported new Tesla registrations dropped 67% year over year in May, with overall sales are down 47% year to date in France. Sweden reported that Tesla registrations were down 54% year over year in May. Meanwhile, Reuters reported Tesla registrations fell by 31% in Denmark, 36% in the Netherlands, 19% in Spain, and a massive 68% in Portugal. There was some good news though. There was one country where Tesla sales actually increased in Norway. Sales surged 213% as the EV maker's market share in Norway was nearly 94%. It's the one country where Tesla's sales are still strong. So this comes even though Tesla sales were expected to rise following the company's release of the refreshed Model Y, which has generally been well received by critics. It's a much needed refresh. The same looking car for several years in a row is one of the primary reasons why I think sales are falling for Tesla. I know many individuals are blaming Tesla's sales declines to Elon Musk's political actions, but I think you have to attribute part of the sales decline to the fact that they haven't really refreshed their lineup in many years, while competitors have improved the availability of their electric vehicles, different price points, different features, different colors, different models. All of that means that some consumers will choose those over the Tesla when they're shopping for an electric vehicle. Even though, if you compare them head to head, the only real automakers that are rivaling Tesla are the ones from China that are able to deliver very great affordability on the electric vehicles. Nearly every other automaker can't compete with Tesla in terms of price versus performance. But consumers, when they're shopping for a car, that's not the only thing they look for. If that was the only thing they look for, then consumers would buy a lot fewer cars because cars are made to last a very long time. But many consumers upgrade their cars after 3, 4, 5 years, even though cars can last you 10, 15, 20 years, right? And one of the major reasons why people upgrade their cars is because they see a new car, they like a certain style or color or a certain feature of a new car, and they go out and they buy it even though they don't need it. So this feature performance, price performance from Tesla is no longer driving sales from consumers. And of course, here's a chart with Tesla's registrations in Europe plummeting down in almost every region and down significantly in almost every region. Of course, yes, I agree that the political behavior of the company's CEO is also contributing to the sales declines, but I just don't think enough attention is being paid to the fact that the company, competitively speaking with its models, is now less competitive in the marketplace because they've been relatively stagnant while everyone else, every other car manufacturer has come out with newer and more updated models with more features. And of course, they have longer customer relationships. And so if they have something that's even remotely competitive, then consumers that have, let's say, been with Ford or been with GM or been with Honda or been with Kia for a long time with their traditional models, and now if those companies have an electric model, then those brand loyal customers will stay within that brand and upgrade to the electric vehicle from that brand that they appreciate. And so that's not getting enough attention as automakers have ramped up their investments in electric vehicles. Again, especially the Chinese automakers are doing a great job at producing these electric vehicles at lower price points, which is what consumers need. The price of car ownership in the United States, especially, is soaring. And so consumers are looking for those lower priced models, which are rare to be found here in the United States. Very few cars are available for sales at less than $25,000 here in the United States. So you could see Tesla's sales have started declining. From 2024, their sales fell from 97.7 billion down to 95.7 billion in the most recent trailing 12-month period. Annual sales were down in 2024 from 2023. And if I share with you this snippet from Tesla's most recent shareholder letter, you can see year-over-year revenues were down 9% overall, while automotive revenues were down 20% in the first quarter of 2025. So they're on pace for more declines in revenue in 2025. Even though the other segments are doing relatively well, the automotive segment is still the biggest segment for Tesla, and it's falling significantly with no end in sight, right? We were supposed to see a lower priced model, which I think would do a lot to bring down these sales declines, at least keep them flat year over year. But I haven't heard much about the lower priced model. The good news for Tesla stock investors is the company is on schedule to launch driverless car testing in June in Texas. That will at least keep the stock price from crashing, because I think a lot of investors will gain optimism from those tests. And so that will keep the stock price from crashing further. But in terms of actual tangible results, it's not looking good for Tesla in 2025. Perhaps in 2026, we can see some better news from Tesla if they make more progress on developing that lower priced model, which they said they were going to launch in the first half of 2025. They were going to have a lower priced model. They also said that revenue was expected to increase by 20 to 30% in 2025. That's not looking very likely. And this wouldn't be the first time that Tesla has promised something to investors or forecast something to investors and fail to deliver. It's just yet another data point for investors to consider how accurate Tesla's forecasting ability is when they forecast items to investors. And even the CEO acknowledges that he tends to be more optimistic when making forecasts than, realistic. And so much of the forecasted numbers from Tesla fails to even come remotely close to what they forecasted. By the way, this is finchat.io, the platform I'm using to get this data. I really like how they aggregate all of these companies that I'm following, all of their investor relations documents and statements and all that. Saves me a lot of time when I'm researching companies and I'm following hundreds of companies. Even if you're only following 5 or 10 companies, it really helps to have everything in one place. All right, so let me remind everyone, I've not had Tesla stock as a buy all year long in 2025. In fact, to start 2025, I had Tesla stock rated as a sell. And after the stock price crashed by roughly 40%, I upgraded the stock from a sell to a hold because the valuation became a little more appropriate. It was a little less extreme in terms of the overvaluation. Now, as Tesla's sales continue falling and the stock price continues rising on the back of optimism for driverless car technology, its overvaluation is reaching those extreme levels again. I'm not quite ready to rate the stock as a sell, but if it keeps moving higher, even though every data point suggests that the company is moving in the opposite direction, I may downgrade Tesla stock to a sell again. It's closer to a sell than it is to a buy, in my opinion. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.